Today's episode is one of my favorite episodes to do, and we probably don't do this enough. JC and I are going to take 5 viewer listener questions, and we're going to answer them. All 5 questions came in from mortgage sales professionals who are looking for advice on how they can become better. Better at sales, better at marketing, better at operating their business. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Dio, what's popping?
Oh, look at you trying to raise up the energy.
Just a little squirt. That's all you get.
Dude, here we are, first week of March, and
year's halfway over.
Year's not halfway over.
mean,
you could say first quarter is more than halfway over. It's 2/3 over.
Business talk.
Business talk. No, man, I'm all pumped up and excited. Today's my son's 20th birthday. Like, we're recording this on the 4th of March.
Congratulations.
My son has the coolest birthday, 345.
Oh,
345.
Oh,
yeah. How about this, though? This is going to freak you out. We're getting ready to onboard a TLOPer. I can't name the name yet. It hasn't happened yet.
Oh, shit.
But we're going to onboard a TLOPer to be a producing branch manager to work with me.
What?
Right? On my team. Get coached by me weekly. Okay. You know what I just learned? Oh, by the way, this is a guy that has $6 million in volume.
I know what you just learned.
In their pipeline.
You learned how to pronounce his first name, probably.
No, his first name is pretty easy. It's only 4 letters. But he has $6 million in volume. You know what I learned?
What?
He's celebrating his birthday this week also.
It's called synchronicity, Dustin.
He's only, get this, he's only a year older than my son.
And
he's doing $6 million in volume. Yeah, he bypassed going to college. He jumped right into sales at 18, jumped into the mortgage industry.
You never wanted to strong arm him?
He was a TLOP listener. He then went through a TLOP LO launch course, and then he reached out to me. He's at the next iteration of his career. He's ready to open up his own branch. He's doing 15 to 20 transactions funded per month, roughly $6 million per month. I didn't know how young he was.
Does he look old?
No, he looks young, but dude, you could be 24 or you could be 29.
Well, 14-year-olds now
or 21.
14-year-olds look like they're damn near 35.
Or 21. So I have that going on this week. I head to Cancun on Thursday.
That's not something to brag about, Dustin. Please.
I'm not paying. Can I brag about that?
I wouldn't go.
It's all inclusive.
I wouldn't go even if it was paid for.
You sound like my wife. She's like, I'm not going to leave.
Cancun is trash.
It's free.
What are you, 16 in this MTV spring break?
No, I'm 46. Stop. And it's free.
Yeah, it's free. And they're like, oh, can I have a Modelo or a Corona? And they're like, yeah, here's a Dos Equis. That's the only thing that we serve.
John, you taught me if it's free.
It's for me up until a point, and then I'm like, all right,
whatever.
All right, but
you know what? Yeah. How about this? It's a work event.
That's what it's about.
And I've only been on board with my new employer going on 7 months now. And there's a lot of people that I don't know yet.
Are you
and
set
I'm
to speak?
excited.
Are you set to speak? Do you have an engagement?
Speak. Yeah. I'm trying not to slur. Like, that's my goal. I'm not going to be speaking. I'm just going to try not to slur.
Is this like an event where they bring people out just to get smacked and get to know each other? Or are there like day 2 breakout sessions where you get to like learn fucking new products and shit?
It's a top producer,
panel.
Top achiever. No, it's an awards trip.
Oh, yes. So they hand out those lacquer trophies with your name engraved on it.
It's look, all the men and women who made a shit ton of money last year because they produced a bunch of loans get a free trip to Cancun.
Sounds like what they do in the woods for the Bohemian Group.
What?
You don't know. How do you not know all this stuff?
Who's the Bohemian Group?
How the world really works with they worship the wooden owl. You don't know none of this shit.
Or are they pagans?
Yeah.
All right. Like, let's not go down this rabbit hole, John.
We don't.
We're gonna get some people angry with us.
It doesn't matter. We can go down rabbit holes because we pre-recorded all of the ads, so Dustin won't have time to ramble. So we have now pre-baked time in to talk about whatever the fuck we want.
Well, if you do better with timestamps, people can just jump through and jump right into the meat and potatoes. How about that?
Yeah, let's give them some carrots, Dustin.
Let's give them some carrots. Nah. So I got that going on. No, but I mean, most mortgage companies do this. It's an annual Achievers Club trip. And because I get to play the role of a sales executive with my employer lower, then I got invited to attend, which I'm happy about because I'm an old company. I was there for 14, 15 years. I knew everybody. Everybody knew me. And there's a certain level of comfort. This trip is going to allow me to, get some FaceTime with my bosses, the co-founders, the founders, and the executives. And it's going to allow me to actually connect with these men and women all throughout the country that maybe I see them on Zoom, maybe I know their name, but I don't know them personally. So I get to do all of that this week. Yeah, there's a lot of stuff popping. But today's episode I love because I started this private Facebook group called Mortgage Mafia. And I don't know why I called it Mortgage Mafia. I could have just called it TLOP's Private LO Coaching Group, but I didn't. And we have about 1,200 members. I've never really promoted it. It's like, look, if you're a friend of mine, I probably invited you because we're friends on Facebook. But I can shout it out today. Like, look, if you want to be a part of a really fun group that masterminds, we do it on Facebook. The group is called Mortgage Mafia. You have to be a full-time originator with your NMLS license. If not, we won't let you in. And I try to post in there 3 or 4 times a week. If there's a special event going on, I try to highlight a special event like Mastermind Summit in Vegas or something like that. And then it's a great place for people to ask questions of each other, right? Whether they're underwriting question, a product question, a script question. It's just a place for us to get together as mortgage professionals and truly share best practices, cheer on successes, ask for help. So I was in there and I'm like, crap, like I got to post today. And even as content creators, we have those days where like, crap, I got to post. What am I going to post about? Well, I just hopped off a call with you and the TLOP team, and we are trying to lay out some upcoming episodes. I'm saying, you know what? Let's go ask the people what we should actually do a podcast episode on. And I posted about it. I had like 35 people comment. And some of the episodes, like, look, I can't do them, or I don't know if they would actually hit or bang, so we're probably not going to do them. There's a couple episodes that we will do, and those people who had the recommendation, we'll give them the proper shout out.
Well, before we get started, let's pay these bills with a new way to introduce our commercials and roll it.
Today's podcast episode is sponsored by our friends over at Arch MI. Mortgage insurance companies are the lifeline of the mortgage industry. Without them, we would not be able to fund conventional loans with less than 20% down. And throughout my career, I have made it my mission to have great relationships with all mortgage insurance companies. But Arch MI, well, they're one of my favorites to help you with things like professional development, sales training, and also to help you get that difficult loan file approved through underwriting. Arch MI, you can check them out on their website, which is mortgage.archgroup.com.
Wow, that was pretty cool. I think that worked out, Dustin.
Beautiful. Well, thank you for our show sponsors. Without you, we couldn't keep this thing alive.
I wouldn't go that far. We probably bootstrap it. But yeah, thank you. Shout out to the sponsors.
Because of you, we don't have to bootstrap going forward. How about that?
Yeah, it's better.
You like that one better?
It's better.
Hey, we'll figure this shit out too, John.
It was our first time doing it, but I hope you guys like it.
All right, so first question coming out of the gates is coming from Danny Stokes. Danny's in Ohio. He's with Huntington Bank. At least when I did my pre-recording stalk, I stalked him online.
Right.
That's what I found about Danny.
Okay.
By the way, some of y'all are easy to stalk, which is how you should be because you're in sales. You should show up online.
Yeah.
Some of you have to do a much better job of making sure you show up online because I had a hard time finding you.
Great feedback.
But Danny wanted me to cover objections as it pertains to rate, politics, and when realtors ask him if he will pay for leads. So that's actually a 3-for-1.
Yeah.
So it makes sense that we're going to start with this one, and I'm going to crush through this as quick as I can.
So it'll be 45 minutes later.
Yes. Which, look, when we do our coaching calls, we always leave room at the end, me and all 5 coaches, so we can answer these one-off questions. Because when we coach, we know why we showed up that day and what we wanted to convey and what we wanted to teach about. But we also need to make sure every one of our members has a chance to raise a hand and get their questions answered. But
sure.
I don't know if Danny's yet a member of TLOP's coaching community. So we'll go ahead and give him the love on the podcast because he's not the only one who has these questions.
Yeah.
Okay. When it comes to overcoming interest rates, this is a entire class in itself. I will share this with you from personal experience and success. You want to discuss interest rates on your own terms on the initial phone call in a manner that you don't commit to any one interest rate because the consumer must learn there are 28 factors that go into somebody's interest rate. The consumer must know that there is no such thing as a one-size-fits-all mortgage. And the consumer must know that it's not the interest rate they want, but the right loan. And your job is to help structure the best loan based on their financial needs, wants, and goals, and based on what they qualify for. And it's our duty up front with consumers to educate them and to provide this type of information because they probably don't know it. It wasn't taught in school, and the talking heads on their TVs don't discuss this about mortgage or about interest rates. At the same time, they need to know that you don't get paid any different based on whether they do a 15-year or a 30-year, based on whether they do FHA or conventional. So that interest rate and the type of loan product has no bearing in your income. All you care about is they get the best loan for their financial needs, wants, and goals that they also qualify for. And you need to make sure that they understand that when they are ready to lock in an interest rate, which typically isn't until they are under contract, we have a property address and a purchase price, that when they are ready to lock in a rate, you will give them 3 options and let them choose what interest rate they want. And then finally, we should tell all consumers and all borrowers that at the end of the day, mortgage companies and banks, we get our money from the same people. We sell our loans to the same people. So if we're all borrowing money from the same people, we're all delivering loans to the same people, meaning we're all borrowing money from warehouse lenders, we're all delivering our loans to Fannie, Freddie, or Ginnie, then there's not going to be that much of a difference from one lender to the next. Now, there's a difference in service propositions and the type of advice you're given and so many other aspects, but they're not interest rate related. And I think we as professionals have to share that with our consumers up front. And mortgage rates change every single day, usually multiple times a day. And until you're in a position that you're ready to lock in, what today's interest rate doesn't really matter. When it's going to change 3 times between now and the end of the day and 2 more times tomorrow. And mortgage interest rates impact payment way less than things like property taxes, homeowners insurance, and HOA dues. So although they're concerned about rate, they need to know that you're going to make sure you give them the most competitive rate you can find at the time that they're ready to lock in. You're going to give them 3 options, let them choose which option is best for them. And although they're concerned about interest rates, and they should be, we can't control them. They change daily, and they have less impact on the payment than things like property taxes, homeowners insurance, and HOA dues. So how do I handle interest rate? In a very long, educational, I'm your advisor, let me teach you manner. And I drop all of that onto my prospective borrower early up front when I'm playing with home field advantage, so that all of a sudden they understand way more about interest rates than they did. And they trust that I'm going to make sure I obtain for them a competitive rate.
That was sexy, Dustin. Well said. Do you want to hear my approach? You want to hear my role play?
They would love to hear. Not me, but they would. We don't do it for me, John. We do it for them.
Sure, Mr. and Miss Borrower, I can give you a 2% interest rate. I think that's as low as I can go through something called a 2-1 buy down or some other shit, but you don't want to hear that. I'll give you the cheapest rate, but your payment will be $10,000 a month. Sign on the dotted line. And just stop talking. Well, why is it so much? You said you wanted the cheapest rate. I'll give you 2%, $10,000 a month. Well, that seems like a lot. Well, yes, it does, Mr. Borrower, doesn't it? And then just leave it at that.
You know, there's somewhere in the middle, there's a lesson to be learned there. The math ain't mathing, though. Like, you can't have a 2% rate and a $10,000 a month payment unless taxes and insurance are through the roof.
PITI, UFMIP, all that.
All that.
All that rolled into one. I was like, yeah, I'll give you, you know what? I'll give you a 0.5 rate. Your monthly payment will be $100,000.
It wouldn't be the monthly payment. It would be their closing cost, would be an additional $100,000.
Is that possible, though?
There's a certain amount where there's the market. Like, we can only do loans that the market's willing to purchase, and the market's not offering that low of a coupon.
Fuck that. I'm going to start my own mortgage company. I might create my own widget.
I mean,
the 0.5 interest rate loan.
Yeah, I mean, look, if it made money, John, there's people way more experienced and smarter than you and I that would have done it already.
I know, but it's about the execution.
It's not. I mean, if you told me that you were like inherited $10 billion, you want to give it away and lose money fast? Yeah.
Oh, okay.
Yeah, hopefully. Brewster's Millions. We got JC's Billions. Like we could do JC's billion, sure.
I like the way that sounds.
All right, let's
Okay.
get into politics real quick.
Okay,
And
yes,
there's
our favorite.
There's a Sammy Kershaw song from the 1990s.
What?
That,
Who?
Hey, exactly. Y'all need to go listen to this song.
Sammy Kershaw?
Yep.
Is that like Garth Brooks?
It's 90s country. It's country.
Twang.
It's twang AF. I love me some Sammy Kershaw. He was once married to Lori Morgan. I had a crush on Lori Morgan back in the day when I was a kid.
No Shania Twain?
I had a crush on her too. Yeah, but Lori Morgan was first. So anyhow, the song is Politics, Religion, and Her.
Oh, I do.
And it basically, you don't talk about politics, religion, or please don't bring up his ex because he was so heartbroken because she left
Let me
his
guess.
ass.
Here's where you're going to talk about the color purple because, hey, just precursor to y'all, I am and Dio and JC are as neutral as they come, blah, blah, blah. So you don't have to say it, so just get right into the
No,
field.
it was more about political uncertainty, actually. So Danny Stokes was asking us, like, how do you handle buyers and borrowers who are waffling about becoming homeowners because of political uncertainty?
Give them a free upgrade to your Netflix account and just have them binge on shows and not watch MSNBC or Fox News. Simple. Done. Next.
Oh, you mean, turn off the freaking TV.
Yeah, here's my
Yes.
Apple Plus login. Go
Yes.
fucking go ham on Severance. Have you started watching that?
Yeah, you know what's interesting about me and my friend group? I don't tend to hang out with anybody that watches
The news.
religiously Fox News or MSNBC or CNN.
Anything in between.
Like, I just, like, for whatever reason, I'm not attracted to those people or they're not attracted to me.
Correct.
Like, that's just not my jam because I don't feel like any part of it is good for my brain.
It's not.
I would much rather, like, check out what's going on in my neighborhood. What's going on if I went to church? I don't, though, but if I went to church, like, what's going on in my church?
UCF sports.
Yes.
That's all that matters.
What's going on in my city? What's going on in my county? Like, how's my family doing? Is everybody healthy? Is everybody employed? Like, that's my world.
Well,
that
shit,
matters
that's
to
the
me.
answer. You just gave the answer without even thinking about the answer.
Well, so the answer I would give to Danny if he has clients sitting on the fence about political uncertainty, I'm like, look, there's no part of housing that is political. Both parties, both sides want nothing more but for housing to be affordable and interest rates to be low. Like, that's what they want. Now, their policies may not allow it. There may be some outside forces that don't allow it. But at the end of the day, we need a place to live. So where are you going to live? You're going to live in an apartment? You're going to live in mom's basement? You're going to own a house, right? When you live in mom's basement, I mean, there's a lifestyle to that. You may be saving some money unless mom's making you chip in on some bills. When you live in an apartment, you are paying somebody's mortgage. You are paying somebody's insurance.
Hell
You are
yeah.
paying somebody's property maintenance. You're paying for somebody's real estate taxes. Like, you are paying. The difference is you don't get to write off any of it on your taxes. The difference is none of that payment is going to pay down your loan, and that asset is not appreciating. So I can't allow external factors that, by the way, I can't control to get in the way. Now, could I say all that in passionately and emphatically to a consumer? Probably not. But I could say to them, hey, ma'am or sir, can we walk through which politician you think is anti-housing? Which political party do you think doesn't want to make housing affordable or interest rates to be cheaper? Like, the reason why I love real estate and mortgage and housing in general, it's not really political. Everybody wants it to be available. Everybody wants it to be cheap. In fact, trying to run against it, you will not win an election. So I'm less concerned. And then at the end of the day, housing on the hierarchy of needs is pretty high up there. We need a place to live. So, you know, regardless of what's transpiring globally, locally, politically, I mean, it's not going to change the fact that I need to get up every day, provide for my family, and part of providing for my family is providing a roof and shelter and safety and security. And homeownership allows me to do that, and homeownership gives me a chance to also do it on a financial side, financial security, financial safety. So, you know, I tend to walk someone through that thought process. And I think we can easily overcome political uncertainty being a reason to or not to purchase a home.
Well, John's take on that. You know what, ma'am or sir? You're absolutely right. This place is going to hell in a handbasket. Better get your house up now. Scoop them up while you can, because once those alarms start ringing, it's really hard to evacuate a fully loaded apartment complex. So it's much better to own a home. So I don't care.
There's actually some truth to that,
I know
John.
it is. I don't be missing, Dustin. So
Yes.
yes, ma'am or sir, don't renew your lease, break it, move into the home, because once the tornado drills go off, once everything goes to shit and you lose Wi-Fi, it'll be much more comforting when you have your loved ones close and by your side.
All right, there we go. And then Danny's last question had to do with paying for leads. This comes up all the time in the clients that we coach and within the coaching community. So I can go twofold on this.
Okay.
Strategically, I can tell you success stories about how branch managers and loan originators led into a relationship where they were willing to legally pay for the business. Right, like I can share them with you. I can give you names, and I can talk to you about the income they earned.
Okay,
that is a strategy, and that strategy does work for those that have the capital to deploy, and they have the relationships that they trust enough to make this investment into. Now, for the rest of us, this is where you have to figure out what's most important to that agent. Is it the $500 a month, the $300 a month, which is like $3,600 to $6,000 a year? That matters to them? Or is it you helping them actually convert one extra lead into a sale? What's that worth to them? Is it you helping them generate 10 extra leads a year that turns into one extra sale? What's that actually worth to them? And I'll tell you that those two extra transactions could be worth $12,000 a piece or $24,000 a year. So I have learned to ask those that want me to lead into a relationship by paying for their Zillow or their realtor.com to simply state, well, what's most important to you? If I could show you how I help agents just like you convert one extra lead into a sale, what's that worth? If I can show you how I help realtors like you generate 10 extra leads that help them sell one extra home, what's that worth to you? Because as your partner, I think you need my money less than you do my time and my expertise. Now, Danny and everybody else, you also now have to know, and you have to act, and you have to provide the service and the value that would actually help somebody convert more leads, generate more leads, right? You have to help convert the leads they have, help them generate more leads. Like that's what you have to solve for. But once you solve for doing that, then you can get around paying the $300 or the $500. And many people have heard me say this before, and I'll say it again today. If you ever want to go tongue in cheek, I would say to somebody like, look, we don't know each other just yet. I would love to get to know you. I'd love to work with you. And once we figure out whether or not we work well together, I'm a business operator. I love marketing. I love sales. I love advertising. If there's an ROI to be had, by all means, I'm willing to spend $300 a month, $3,000 a month. Heck, I'd spend $30,000 a month with the right partner, as long as I knew we worked well together and we were totally aligned and it was going to be a true partnership. But before we know that, if you want me to lead into a relationship with money, that's prostitution and I'm not a whore, right? Like, I mean, that's in a way what I would tell somebody. So anyhow, Danny in Ohio, thank you so much for the question. I'm going to move on to maybe a lot quicker for this one. Larry Matarasso. Hopefully I said that right. Larry Matarasso, Green River Capital is who Larry works with. And Larry wanted me to discuss loan originators like us adding reverse mortgage to our product offering. Okay, at the end of the day, I tried this at my old company and it fell flat. And I was so disappointed because, Larry, I'm with you. The ability to offer reverse mortgages is a massive opportunity to every mortgage lender in America, right? The data tells us the boomers are now reverse mortgage eligible. The boomers are not moving into retirement homes and the boomers are living longer. Okay. Knowing all three of them, that should tell me these people want to stay in their homes, but if they need long-term care, how are they going to pay for it? Oh, maybe a reverse mortgage, right? If their medicine is going up in value, if their Medicaid or Social Security is being impacted by some of this political uncertainty, this solution could be what they need in order to enjoy the last part of their life. So as an originator, I don't know if I would advise you to do reverse mortgages unless you knew you could do at least 2 a month. But does your company provide them? Do you have an ability to refer your circle of influence and your past clients and your referrals to someone within your organization and get paid 75 or 100 basis points. At which point, if you want to attract any type of borrower, you have to create the content that speaks to them. So if I'm Larry or any other loan originator, I would just ask you, which of your newsletters were you telling real estate agents how they could use a reverse purchase to help a senior buy a home, putting 50% down and never having to make a payment, right? Which of your communication to your circle of influence or your past client network are you letting them know through storytelling how you helped someone that reminds them of them, how you helped someone that reminds them of their parent or their grandparent change their life for the better financially through a reverse mortgage? So if you're not doing anything to market it, if you're not doing anything to tell the story, to create the content, to push it out there, you're not doing it consistently, then you can't expect referrals. But between your social media content, your newsletters, your email blast to your past clients, any communication you have with your circle of influence, are you using storytelling to explain how you are helping people live better lives, how you're helping people achieve certain financial goals through this thing that we call a reverse mortgage? They don't know what that means. That scares the shit out of them. It's a senior home loan advantage, right? It's a senior home loan advantage. Oh, I'm a senior. I know what a home loan is, and I like advantages, right? Those are the types of things that you're doing. But Larry, it just starts with speaking to the audience that you want to attract and doing it consistently, weekly, monthly, quarterly, yearly. So Larry, appreciate the question. I did an episode way long ago on reverse mortgages. For anybody who's interested, you can go dig that one up and look for it. All right. Now we're going to slide over to our guy, Justin Ross with U.S. Bank.
U.S. Bank, let's go.
So Justin wants to know, how do you do it all? How do you, in my words right here, juggle the chaos? And I kind of dove in a little bit like, what do you mean, Justin, juggle the chaos? He's like, well, I have to service. I don't know what he meant by service, but he has to maybe service his clients. Yeah. I have to market. I have to pre-qual. I have to do apps. I have to do this. I have to do that. Like, how do I do it all? That's a loaded question. Like, this is something that, shout out to Co. Co's my most recent elite coaching student. He's a young guy. He's going to crush it. He's already doing really well. Graduated from UCLA a year or two ago.
Oh, shit.
Yeah. But I would tell you what I told Co yesterday in our first call, right? So Co just signed up for elite coaching. And I asked Co about his calendar. Doesn't use it. Okay. Well, if you're trying to control anything, you have to put a framework around it. Okay. Well, you put a framework around it by living by your calendar. And I'm not saying being so rigid that things are time blocked to where like, well, I can't do that right now because it's not my time block. But Justin and everybody else, if you are not religiously living by your calendar, that's step number one to doing anything at a high level and anything that's going to make you less of a sales rep and more of a business operator. The second thing, and we coach and we teach this, like we have to structure our weeks by following themes. And it's not that if I follow a theme, I can't do anything else on that day. It's just the theme reminds me of what I need to get done that particular day. And we all have themes. Okay. Teachers have themes. Professional athletes have themes. Weightlifters have themes. Triathletes have themes. Like, heck, my garbage collector has a theme, right? Like they know when they get yard trash, when they get recycling, and when they hit my neighborhood versus the neighborhood that is 2 towns over. So we all have themes. We have routes. You need to have themes for each of your day, and they need to be very consistent. And then many of us, we need to have a who and not a how. There are only so many hours in the day. We have to get good at delegating. We have to get really good at setting proper expectations, then holding people accountable to actually succeed in the expectations that we laid out. We call that inspect what you expect. And that can start with your company provided processor. Eventually it can lead to you hiring your first either loan partner or loan officer assistant. But we can't do it all. right? There's no successful business operator out there that I've met that A, wasn't professionally coached, that B, they weren't a reader, like an active learner, and C, that they did it all. No, they build teams. They find who's and not how's. And then there's certain things that, Justin, you just have to realize it's not your priority. So therefore, you don't stop what you're doing to do it. So an example of that would be me doing my expense report is not a priority. I will get it done, but I may get it done at 4 p.m. on a Sunday when, I don't know, the rain came in and it canceled my golf outing. There are certain things that I can get done between the hours of 7 p.m. and 9 p.m., right? I need to play inside of a loan file and run various scenarios. I do not have to do that during my Monday through Friday 8 to 5 hour, right? My Monday through Friday 8 to 5 hour has to be very intentional, and I need to make sure I prioritize my sales activities, my outbound engagement.
Green time.
My green time has to be, everything else can come second nature. It doesn't mean that I don't pick up the phone, embrace that person, show them some love, but then I can let them know, hey, I'm going to work on this tonight for you. I'll be able to have you an answer by 11 a.m. And I'm always under promising and over delivering. Just because I can get something done by 5 doesn't mean I promise it by 5. I may stop and ask, like, hey, how important is this to you? Is this something I need to drop what I'm doing and get done today and possibly not pick up my children from school? Or is this something that I can get to you by noon tomorrow? What you'll find by asking a question like that, for many cases, it's by noon tomorrow. It's not as urgent as it came across in the text. It's not as urgent as you read it to be. So you have to find a way to prioritize. And there's certain things that you get done after hours, and it's called homework, right? My kids have homework. We can have homework too. It's stuff that we didn't get to during the day because it was less important, right? So that is in a nutshell how you juggle chaos. And the last one on that topic of juggling chaos is how to prioritize. If you want to know how I prioritize as an originator, it's real simple. First and foremost, is this going to make me money? If it's going to make me money, it's my priority. So that's typically a new lead, a new loan application. Like I need to get that structured, locked, get the borrower to commit to me. I need to win this borrower over through a home buying consultation that turns into a pre-approval. If there's money involved, it's a priority. Now, if I have 3 things, all with money involved, all staring me at the face, I then do a second prioritization based on relationship. Which of these 3 things has the most important relationship involved? Now that becomes the most important of the 3. And then the second best relationship, and then whatever it doesn't have a relationship involved is something that I can push to tomorrow. I can pick up the phone and say, hey, so sorry, ma'am or sir. I know I said I'd get this to you by 5, but something came up. By the way, people understand something comes up. They're human too. What they don't understand is being ghosted. What they don't understand is being ignored. What they don't understand is someone not showing empathy or being apologetic. So I think proper communication is a great way to keep chaos at bay, just like structure is a great way to keep chaos at bay, as well as finding a way to empower others to be your who's, because you can't do it all yourself.
I thought you were going to say money, like the number 2 thing. I thought you were going to go with money, whichever scenario has the most money on the line. But it's interesting you went with the
relationship. Yeah, look, at the end of the day, I whether you're Kevin Murphy, Shirley Agudelo, Marissa, Cam, like I look at the men and women that have come up through my personal production team that all have phenomenal careers still today in the mortgage industry. Mm-hmm. Probably one of my more proud accomplishments. Like outside of my children, it would be my work children, right? Those men and women that got to work under me. I'm hard to work for. I have very high standards of myself and others, and sometimes are unrealistic. Like I get that. I'm big love, but I'm also, a little bit of at times I can be passionate and not in a positive way. So I told all of them the same exact thing, and I'll tell the next group that I bring on and I onboard. If I can throw money at it and fix it, it's not a real problem. Like it's not. So like if you did something and it cost us $5,000, it was a mistake. All right, cool. I can go make $5,000 again. I'll go work 2 extra hours. I'll make 20 more calls. I'll schedule 3 more appointments. I'll put on an event, whatever I have to do. Like you see me do it at TLOP. Mm-hmm. Hey, we need money. Cool. Let's open up another launch class. Mm-hmm. I'll go teach 10 more loan originators how to dominate being mortgage professionals. Why? It's an easy way for me to raise money for TLOP. So same thing applied to them. If they lost money, but it was an aggressive mistake and they learned, dude, I don't care. If they flubbed up a relationship, that relationship could be worth $50,000, $60,000, $80,000 over the next 2 or 3 years. I can't flub up my relationships. I could drop the ball. I can I can misquote something, misprice it, whatever the case may be. Money, if I can throw money at it, or it's just a money issue, and it's a non-issue. Relationship's a bigger issue.
Well said.
So yes, I'm sure, John, if I had 3 things that were all alike, and all 3 things had the same caliber relationship, and I had to put them in order, then I'd be like, of those 3, which pays the most money?
Cool.
That would be probably like the 3rd rung. We hardly ever get to the 3rd rung.
Right.
So Justin, that one was for you, and obviously everybody else. This is going to be a really fun one. This is my girl, Christine Wilson, at the mortgage firm here in Orlando. I can't wait to have Chris on the show. She's a badass. She's a mega producer. She is leaning hard into like being a life coach, which is something we don't do yet at TLOP, that I'm going to try to incorporate her, which is why I want to have her on the show. But she posted, again, this is that same post that you can find still today. It's up at the Mortgage Mafia private Facebook group. But she goes, how to stop tolerating realtors and start thriving with realtors. And Christine, when you wrote that, it just had made me remember something that we walk all of our coaching students through. Some will, some won't. Who cares? Move on. So we start there. Okay, if you're tolerating somebody, you're probably not a good fit. They're not your people. Why are you putting yourself through that? Like, are you your best when you're just tolerating somebody? No, you probably half-ass it. At least I know I do. Why would I ever want to be working with somebody that's getting the half-ass version of me? I'd rather just not work with them. So some will, some won't. Who cares? Move on. Well, they won't. So let's just move on, right? Wish them the best of luck and move on. Our girl Kayla Sharp up in Jacksonville. She's done a lot of stuff with TLOP. We've had her on the show. She's coached with us. Like, really respect the hell out of her. She does an amazing job. And I love Kayla because she is one of those people, and even Gwen Swain, who still coaches for us, and she's out in Boise, Idaho, works for Waterstone Mortgage. Shout out to Gwen. Both those women do an amazing job of running their business and not letting their business run them. They know who their ideal realtor is. Like I will tell loan originators, look, your ideal realtor is anybody that is full-time, professional, and in growth mode. I don't care if they're 19 or if they're 79 years old. Like, as long as they check those 3 boxes, they're somebody you should meet with. But these 2 ladies go even further. Gwen straight up says, if my boyfriend and I would not enjoy going to dinner with you, I don't need to work with you. She's in Boise, Idaho, top 50 market, but not top 10 market. But she recognizes there's enough business in that greater area, that the Boise, Nampa area, that she needs to find her tribe and her people. Kayla straight up coming into the business. Like, she was divorced, mom of 3, business professional, in between the ages of 30 and 45. Do you know who she was attracted to? Other divorcees, single moms, business professional between the ages of 30 and 45. And luckily for her, that species dominates in the real estate world. But she didn't have to go and succumb to agents that didn't meet her tribe specifications. And I think we all can learn, including this guy, more from them, because I tried to be everything to all people. And I'm like, no, be the best DO to the people who love DO. And then the rest of the people move on and go find others. Just keep making the phone ring, having the meetings until you can build your tribe. That's what more of us need to do. And Chris, that's what, when Christine wrote this, that's kind of what I took from this is like, I shouldn't have to tolerate if I'm working with those men and women that are truly like-minded, those men and women that my wife and I wouldn't mind going to dinner with, those men and women that are full-time, professional, and in growth mode. And then one other thing that I had to remember that was taught to me about realtors in general, and it came from my ex-business partner, Mike Smalley. So shout out to Smalls. But he literally sat me down one day because I was having a rough go. I was pretty angry, pretty pissy towards whatever realtor that I'd allowed to get under my skin that day. And Smalls was like, Dio, look at your life. Is it great? I said, it's freaking awesome. He's like, better than you thought it would be? I'm like, I'm crushing it. Like, compared to what I thought when I was 18 or even 28 years old, I'm like, this is amazing. He said, how'd you do it? I'm like, what do you mean? Like, I worked really hard. I did 12-week challenge. I worked open houses. He's like, no. But who are your clients? I said, real estate agents. He said, so because your clients believed in you and because your clients trusted in you, you get to have this awesome career. He said, flip the script. Start showing love even on the days that they make you angry. I was like, oh, damn. So I did have to change my mindset when it came to real estate agents. I was having a bad day, maybe a bad quarter, hell, maybe even a bad year. But I also learned I was allowing myself to be in relationship with people who I didn't necessarily respect. I didn't necessarily enjoy. So to Christine's question, I was tolerating them. I got rid of them. Literally got rid of them. I just posted this in the Mortgage Mafia because it said that we are the sum of the 10 people that we spend the most time with. I'm going to sit with this thought, and this is what I encourage those 1,200 members of Mortgage Mafia to sit with. Look at your top 10 list. Like, write down, who are the 10 people that you spend the most time with? Do you love exactly where you are in life? Do you love exactly where you're going in life, both business and personal? On my end, I probably need to spend less time with 3 people, and I should spend more time with 2 people, and I need to go find a person that I don't know yet and find a way to connect with him or her if I'm truly going to be the sum of the 10 people I spend the most time with, because I want to become a better version of me. Like, every day I realize if I'm not growing, I'm dying, and I am forever in growth mode. And I think the same thing applies to us as mortgage professionals. When we call on real estate agents, we sometimes need to go find more in order to find those that are most like us. So Christine Wilson, the mortgage firm, she is a fellow Central Florida resident, just like John and I are. Thank you so much. And then I'm going to get on to my last one. Okay. And if time permits, I have 2 quick bonuses I'll throw in there just so I can give a shout out to Matt Moe and Brad Payne. But this one came in from our guy, Corey Whedon. Corey is a hardcore TLOPer. He's been OG TLOP for years now. Yep. Corey's up in Sioux Falls, South Dakota.
Oh, yeah.
Love me some Sioux Falls. I was up there for a wedding a few years back. I have cousins, actually my wife's cousins, but I call them my cousins, live up in Sioux Falls. And Corey wanted us to do an entire episode on like how to double your business. And we may go doing that. And he basically said, Dio, you do some great stuff. You and JC crush it. He's like, but a lot of times your stuff may be speaking more specifically to the men and women who are still trying to figure out how to consistently generate 30 leads a month and consistently fund 4 to 5 loans a month. How about those of us that are trying to go from 5 loans a month to 10 loans a month? What do we need to do?
Whatever you're doing that works, do twice as much.
You would think so. You would think so. I would actually first and foremost recommend, if you're there, you got to find a who. You have to find a who. We talked about it when we were answering the question from Justin about juggling chaos. Your who is going to be either a loan officer, assistant, or a loan partner, right? And what I would have you do is I would have you actually draw turn an 8.5 by 11 sheet of paper into 4 quadrants. And I'd have you do this exercise where you wrote down what are the things that you like to do and that you're good at. What are the things that you are good at but you don't like to do? What are the things that you like to do but you're not good at? And what are the things that you're not good at and you don't like to do? And the first person you would hire, Corey, is going to be is going to do those things in the quadrant. I don't like to do it and I'm not good at it. And then what this should do is free up your time, because you do need to expand your referral network 100%. You have to make more sales calls. Like, this is the second time I ever did the 12-week challenge is when I wanted to double my business. I was already doing 20 million and I wanted to get to 40 million. Well, the 12-week challenge helped me get there. Just like the 12-week challenge helped me go from obscure, brand new, to 100 contacts, 15 people referring me consistently, and I'm closing 4 to 5 loans a month. So, but most of us, we have to go hire and find a who. Now, that means we have to set proper expectations. It means we have to lay out what their job description is. How are we going to hold them accountable? So it's going to take some work up front to get this person up and going. But I can tell you this, I can hire an assistant today who doesn't even know there's a T in mortgage, and that person can bring me value. They can pick up the phone and be super nice, make sure I miss less calls. They can dominate my lead follow-up. They can reach out to my past clients and schedule them to do annual mortgage reviews. and they can reach out to the realtors that already know me and either get them on my schedule or invite them to some event that I'm hosting, such as a happy hour or a lunch and learn. So I can go find someone for probably $20 an hour that doesn't know there's a T in mortgage that can do all of those things for me that bring me value. And then, Corey, you have to look at what are you not getting to, right? Or do you not have a 9-month prospect follow-up system? You're not using a CRM. Okay, cool. When you go hire that who, you can delegate that task onto them. Are you not doing annual mortgage reviews? Are you not dominating your lead follow-up? Are you not meeting with enough realtors, not going to enough networking functions? You need to figure out where your $500 an hour tasks are and do more of those, and you need to delegate the $20 an hour task. That's exactly how people that double their business, that's what they do. Now, they also follow a calendar religiously, right? They probably have a professional coach, someone who has done it before them, that can teach them the ways, so it shortens the learning curve and it gives you somebody to bounce ideas off of. But it is all possible. It takes you investing back into your business, and that investment is into a coach. That investment is also into a who, and the who investment is more than just money. It's money and time. But, Corey, that's what I would tell you to do in a nutshell. Not going to spend 40 minutes doing an entire episode. And then finally, my bonuses were, I got Brad Payne with our friends over at Edge Home Finance.
Shout out Edge. I remember them.
Yeah, no, we love Edge. And Brad's in South Carolina, and Brad had a question. John, I'm actually going to pull out my phone right now.
Go Gamecocks.
You think so? You like Gamecocks over
Go
Clemson?
Clemson.
All right. Well, hey, give me a second.
Go NC State.
You keep on saying go anything you can think of. I need to find my phone.
Hurry up. This episode is dragging on. It's taking way too long.
Is it really dragging on?
Yeah.
Oh,
I got to redo my meter at 1:36, and we got another episode to record after this.
All right. So let's go ahead, and we are going to find both Brad and we're going to find Matt Moe, because they both had questions that I was like, man, if I have time, I'm going to get to their questions. And I'm curious, Matt Moe is with E-Mortgage Capital in California. And I'm curious if Matt Moe's actual last name is Moe, or if it's just short for something else.
Sounds like they're cleaning money out there on the West Coast.
You think so?
Probably. Anytime I hear a mortgage company I've never heard of and they're in business and they have more than 5 employees, I'm like, you're cleaning money. I'm serious.
Why California, not like, Miami?
That's like 90% of businesses. I don't know how most of these companies.
I think you're watching too much Netflix. What do you think about that?
I started watching YouTube. I'm down that rabbit hole now.
All right, so check it out. Matt Moe. Oh, I knew what Matt was asking us about.
Do you?
Okay, yeah. So now I do. I pulled up my damn phone and I found the post, John. But Matt Moe was asking us more about, like, how does he help his friends and family and not feel guilty about not hooking them up. And I struggled with this as an originator, Matt, and I'm not going to do this a whole lot of justice, but it'd be a great question for you to bring to our next coaching call, and I'd be more than happy to spend 15 minutes giving you
I got a great answer.
What's your answer?
If you worked at a bank, right, and your mom came in, would your mom expect you to, like, hey, you work at a bank, give me some quarters for free? Would she expect that? Fuck no. So why would you expect, just because I'm a loan originator, I can give you a free home?
That is the right answer, right? That is the right answer. Most people don't expect a hookup. I'll be honest with you. Most people expect you to take care of them. Most people expect you to give great advice. Most people just want to work with someone they trust. I struggled with this as well, John. Now, me being me, I would figure out a way that I could give a slight discount, but it would be like a $500 lender credit, or it'd be like an eighth lower in interest rate, something that didn't break the bank, but it showed my appreciation. And at the end of the day, I have to treat them like any other customer. You're using me because my service is great and because you can trust me. You know I'm going to take care of you. You know I'm not going to screw you over. That's why they should want to use you. Do not feel like you have to drop your pants and do it for super cheap. I mean, if you owned a restaurant, are you going to feed all of your family?
Get out.
Well, you know what some people do?
And that's when they go to business.
Yeah, they become the next MC Hammer or Evander Holyfield stories. Yeah, just because they're your friends and family does not mean that they get a free ride, right? It doesn't. And I think too many of us fall into that trap, and I don't know why it is. It's like a mental midget, like, like we're striking out on deck. No, like let them know what the parameters are. And if you have to, like, use your branch manager or use your employer, and like the same scripts apply. Talk to them about how interest rates are determined. Talk to them about how it matters a lot less and how you're going to help them get the right loan. And at the end of the day, like, your branch has a certain business model that you have to adhere to, but you will be able to provide them with some kind of a friends and family discount, but it may only be like a $500 lender credit or an eighth off an interest rate, and then let them choose which one. Like, hey, I don't care which one you do, but I can do this for you. And if they find something cheaper, to be like, look, you may very well be able to find something cheaper. I can find a cheaper airline. I can find a cheaper dentist. I can find a cheaper hotel. I can find a cheaper cruise. But I also, when I take that cheaper cruise, I don't know if my bed's going to be clean. I don't know how bad that food's going to taste. I don't know how terrible the entertainment's going to be. I don't know whether or not their pool is actually going to work, or they're going to take me to like the ports of call that I actually want to go to.
Piss and dirty Band-Aids, Dustin. End this damn episode.
All right. So lastly, so thank you for that, for Matt Mo. I didn't get a chance to elaborate, but in a nutshell, you heard JC and I cover it. And then Brad Payne over at Edge, he's like, bro, I got the meeting with the realtor. I got the first referral, but how do I consistently get referrals? Okay, this is pretty simple. And Brad, we do coach this incessantly. Okay, you have to show up in their life on social media by commenting, by posting yourself, by engaging in their content. You have to be sending a newsletter, at which point they're getting, whether it's monthly or it's weekly, you have to be reaching out to them at least, and you asked this in your question, every 3 to 6 weeks, they should be hearing from you. And when you call them, and you're following theme days, you're doing this on a Monday, this means you are going to either ask them for another referral, you're going to invite them to an event, or you're going to ask them to meet up with you because maybe it's been a minute and you want to get caught up. If you ask for a referral, it's basically you start with a compliment. I really enjoyed working with you. I would love to find a way that we can continue to partner together. Who do you currently have that you're talking to that's going to need my services? I'd love to get them on my schedule. But you have to do, first and foremost, a great job up front. So when they referred that lead, did you edify the referral source? Did you constantly communicate and update them? Did you proactively reach out to the listing agent to try to sell why their offer needs to be accepted? Did you attend the closing? Like, what are you doing to stand out? If you just kind of took the lead, got the loan closed, but didn't communicate, didn't show up, yeah, there's a good chance you didn't leave a lasting impression. So I think the first thing we have to do is leave that lasting impression, go all in and go all out. Then it's call them every 3 to 6 weeks to check in. There's the 3 reasons why you're calling. Make them a target that you're engaging in their social content. Make sure that you're connected with them on social and they're seeing your social post. Make sure you're including them on your newsletter. And if you do that, there is a great chance they will continue to refer you.
Amazing.
All right. On that note, we have run out of time, ladies and gentlemen. He is John Coleman. I'm Dustin Owen. If you enjoy content like this, please share us, not once, not twice, but 3 times, because sharing is caring. Download us on Spotify and Apple. Give us a 5-star review. Go to our YouTube channel and subscribe. And if you want to connect with me, first name Dustin, last name Owen, I am easiest found on LinkedIn, or you can follow us on Instagram at The Loan Officer Podcast. Check us out at TLOP Online and continue to tune into the show. Unfortunately, though, this is all the time we have for you today. We do look forward to catching you on the next episode. Peace.